Check 1 2 1 2. Okay. What's going on, everyone? Welcome back to the channel. Welcome to Dano Crypto. On this channel, we show you guys how to make simple, effective, and easy moves in the cryptocurrency ecosystems. So we are starting a little bit earlier today because I have to practice for a show that I'm going to be playing here at the end of the week. So we're gonna get our chops together and everything, and we'll be good to go to play this show. But yeah, so practicing a little earlier today, so I wanted to start the live stream off a little bit earlier, and we're gonna go till about 11:15, 11:20 or so. So I do apologize to the people that normally tune in right at 11 o'clock. But if you see this notification, it just popped up. I popped up on your phone. Please come in, hit the like button, hit that subscribe button, ding the bell, do all the things. And good morning, everyone. I hope everyone's doing good. So yesterday, guys, I mean, we were just crushing the Ethereum all-time high, and it was looking like everything was about to freaking fly. And then lo and behold, we had Binance and Coinbase, the usual suspects of any time we start to get breakouts like this, they sell off majorly. But there's another reason why we actually had that sell-off. And it was something that happened on chain, and we're going to pull it up real quick. It was that a whale $2.6 billion Bitcoin sale fueled a weekend crash amid ETH buying spree. So it was interesting that we had Bitcoin take a tumble, and at the same time we had Ethereum pushing strength and pushing into all-time highs, going all the way to $4,900. It was like $4,956 all-time high for Ethereum. So I mean, it was really looking strong. It was in a fight, and we watched it in real time basically go into the plunger here. So I think what's happening is we're getting the shakeouts before the breakouts. And also what's really interesting about this whale sale of Bitcoin is that we've had purchases like Michael Saylor buying billions of dollars on a Monday, buying a lot of Bitcoin, and not just Michael Saylor, but actually these treasury companies. And it made me think about it. It made me think about, why is it that when a whale sells this much, the price crashes, goes down 5%, goes down 10%. But then when we have someone on the other side buying that much, the price doesn't move. It doesn't fucking go anywhere. And so it's like, what is happening here? Why is it that on chain, when we have a sell, we get a crash like that? And then when we have people buying, where's the price movement? It means that they're probably not buying actual real Bitcoin. They're buying paper Bitcoin, an IOU version of a Bitcoin, OTC desk Bitcoin. And they're like, yeah, we purchased your Bitcoin. And it's like, what the hell's going on? So I think it's price manipulation, it's price suppression, and there's some funky things going on. Something's going on. And it's fishy. Something's fishy. Something's real fishy when things like that are happening. It's really strange. So Bitcoin slipped into its weakest level in more than a month after a major investor began unloading thousands of coins in favor of Ethereum. So we had basically this particular whale was dumping Bitcoin for Ethereum. So it seems like, according to the Lock On Chain, an early Bitcoin investor who originally received more than 100,000 BTC 7 years ago has been actively rotating into Ethereum. So over the past 5 days, the wallet deposited nearly 23,000 BTC valued at over 2.6 billion onto decentralized exchanges like Hyperliquid. This is what's so fascinating, is that because it's on a decentralized exchange and because it's on chain, it's directly affecting the price. But then because the Bitcoin that's being purchased on the other side isn't even, it's like, is it on chain Bitcoin? Because if it was, it would be moving the price, wouldn't it? Like the sells would. So Very interesting. So the whale has since taken partial profits, closing more than 95,000 ETH longs at an average price of $4,735 to net $33 million. Meanwhile, the proceeds have since been reinvested into additional ETH spot buys, totaling over 23,000 tokens valued at $108 million. So despite trimming exposure, the address continues to hold more than 40,000 ETH in open long positions with over 11 million in unrealized gains. So this is very interesting. And so according to the platform, the spot trading volumes on the platform reached a record 3.4 billion, and this is Hyperliquid. So this is probably a lot of why Hyperliquid and actually the Hype token has been doing really well. So this surpassed Coinbase's and Bybit's BTC spot volumes combined and is close to and on par with BTC USDC with Binance. Now, if you guys remember, Binance controls about 40 to 50%, maybe even 60% of the trading volume across the entire markets, as with trading volumes for exchanges. Now, this is, I think, very disturbing, and I don't think it's a good thing that Binance has this much market control and exposure of trading volume, because this means that they have the ability to swing the markets like they're doing right now. Like Bitcoin basically about to push all time, like go into another price discovery, and then it just sells down into 110, 112. The only reason it's being able to do that is because Binance is able to wash trade it by $1 million clips, transaction after transaction. And the same thing with Ethereum. Now, if you think about it, Binance has their own blockchain. It's called Binance Smart Chain, and they have the BNB token. It is in direct competition with Ethereum. Why do you think when Ethereum gets to the point it gets freaking sold off and crashed down? The only way we will be able to fight this is if the whales, for instance, this whale right here, rotating into ETH, will then push against this manipulation and price suppression from Binance. It's just obvious at this point. Binance wants BNB to be on top, and they don't want Ethereum to continue to grow. If that was the case, they wouldn't do what they're doing. So I think it's crap. I think Binance should 100% get regulated, and I think it would make the trading markets a little bit more fair. And even us accumulating crypto in general would make it, quote, a little more fair. Now, you would say, hey, this is the game. That's the volatility. That's the price you're willing to pay and the risk you're willing to take. Well, you know what? I think honestly, yes, I get that. But at the same time, we're dealing with like Chinese, Asian sandworms of the billions of dollars in AI algorithms that are going against us. So I think it might be high time for that to stop, my friends, because we want to accumulate these things and we want to accumulate it strong. But I guess when it comes to trading, it's a tough game out there, my friends, because as you can see, you know, we were just right there. We were right up pushing all-time high. We were looking really good, and then look, now we're right back down into a trading range of 111,000. But if you look at where we had previous support, kind of makes sense. Kind of makes sense of having that through line of support right there to bring us right back up to the upside. A lot of the price calls for Bitcoin are heading up into the first Fibonacci extension of the 618. It's the 1618 at 128,000. It's between 128 and 132, around that Fibonacci ratio. And once we break through that particular level, which if you draw a trend and you start to draw the trend of where this could potentially be bouncing into, if you were to go, I can't draw a trend on this particular chart right here, but it's actually in the macro, it's all looking really good. That's why I think, the video that I made recently, we'll go to it real quick. The video that I made recently about Ethereum and how Ethereum is signaling altcoin season. I also wanted to make sure you guys were not focusing so much on the short-term price actions and really just kind of look out macro and what has happened before whenever we've had the ETH BTC ratio break out. And like, so for instance, like we'll give an example of like an ETH BTC ratio that is signaling for, you know, some more moves in the actual coin itself, Solana. So Solana is getting a lot of bullish traction, a lot of good, you know, narratives and different things that we could say that keep Solana in the bullish territory. And it's because of the nature of the treasuries that are set up. It has a CME futures trading chart. There is a ETF flow chart, you know, along with Bitcoin, Ethereum. You see Solana's on this list. So there's a lot of reasons to be bullish Solana, as well as the ratio for BTC. Because as we've seen the ratio for ETH BTC start to pump and find, quote, a bottom, this is when we've seen the biggest run. So the last time we double bottomed on the Sol BTC ratio, we actually went up about 450, gosh, right up to the top, 450%, touching that first 618 as the resistance. And so basically what we're doing is we're just establishing a bottoming again right here in a similar market structure. And then I think we could get another push to this area right here, which will be another 133% push from the bottom here to the 618 for the Sol BTC ratio. What will this do with the Sol price itself? I think it will push it into the cup and handle breakout pattern that we see here on the weekly, which brings us up to all-time highs of $320 per Solana. Now, when we have this happen, we're going to see coins like Radium, Orca, Jupiter, Ponky. We're going to see a lot of Zeus. We're going to see a lot of Solana ecosystems start to react to a Solana all-time high. Now, similar to the Ethereum ecosystem with the ETH BTC ratio, we will show you that that is also, it has broken out already to the first 618, and then now it's trying to test back into the ranges of where we were in previous pre-altcoin season, which was kind of in the ratios right here. So once we get back into this area, I don't care where it is exactly, as long as it's around this 786, the 0.04 ratio for ETH to BTC, this is signaling altcoin season. This signals altcoin season, that we are getting very close to being in a sweet range of altcoin season. And I look, 59.59. We are so close. We're basically getting into altcoin season. This is the pre-altcoin season. So this is really fascinating. I'm really liking how it's looking. So make sure you guys are just keeping into the markets. You are keeping consistent. You're just DCAing, because I really do believe, you've read the title of the live stream this morning, we think that the biggest opportunities are actually going to be next year. I know it's crazy to think. I know everyone's going to tell you and convince you that the top is in. This year is it. You know, this is it, guys. I don't think that's the case. Like, I'm more on the side that we are not going to see I can't think of the freaking word. I just went blank. We are not going to see the implications just yet of interest rates actually being lower. Not just like, okay, we're speculating that they're gonna cut a few times this year. No, it's like we are now in quantitative eased environment where the interest rates are lower, more liquidity, and the money printer starts to come on. You know, and now we're starting to see all of the different legislation for stable coins. We got the Clarity Act, the Genius Act, the Bitcoin treasury bills that could be going into place and being voted on. There's like all of this stuff to be bullish on. And so I don't think we're going to really see the results of this until next year. We will see it like some parabolic moves for this year. Like I think for October, we've said, look, I think we could hit 150K, go back to 120, from 120, go to 200K. We could finish the year. We could finish the year at $250,000 and then go crash back down to the 150 and then continue to go. But the thing that I'd like to focus on is that there is a rotation. There's a rotation that is going to be happening, and I just want to be in the right places. And you guys want to be in the right places when this rotation happens. And I think the gains are going to be more so in quarter one and quarter two of next year. This is just kind of where I'm at. I really feel like that is a good place to be, is to just have patience for all of these things to kind of play out. This is all institutional money. There's no retail. Retail is not even near this market right now. They're not even dipping a toe in just yet. Maybe they're a little bit interested, but not even close to what we had the past 5 years. I mean, look, past 5 years, we're trending down. We are trending down. We've only had a little bit of a spike. We had the only spike that we had that was similar to any of the euphoria of retail even thinking that they were going to try and get into crypto was back in 2021 during the Doge pump and Elon and just all of that stuff. Retail coming in, Wall Street Bets, GME, GameStop, AMC, the run on Wall Street, Roaring Kitty. That was the euphoria for retail coming in after COVID. And then we had the FTX, we had the Golden Boy, we had, the BlockFlies, the Celsius, the Terra Lunas, the yield, all the stuff, the crazy yield. And then basically from there, that was it. It was just literally rug pull after rug pull after rug pull. And then the only other time that we even had even a sliver of retail interest was when President Donald Trump was signaling that he was going to make all the promises for Bitcoin. He went to the Bitcoin conference in Nashville, got a little bit of that spike. We got the Trump pump, and then we went into a Trump dump after January, February, March, April, May, June, July, going basically all the way to the freaking ground for altcoins. So retail, they are not here. They don't care. They would possibly like to care, but they don't have the time to care because they have to work. They have to pay these debts. They basically, for the past 2, 3, 4 years, have probably operated mostly on credit and are now having to figure out how they're going to even pay off all that debt and even get a plan to invest. That's the reality. That is the 100% reality for most retail people and investors that would like to be investors, but they're servicing their debt. So main thing that you guys need to be focusing on right now is if you have debt right now, pay it off. Figure out how to get this debt paid off. I don't care what you have to do. Figure it out. Figure out how to pay this debt because that is your number one priority. Get this debt off your name. Small loans, credit cards, whatever it is, whatever has been a literal leech on you, you need to get rid of it. Take care of it because you know what debt is? It's basically an anchor to the past. Debt is an anchor to the past that is holding you down and holding you back. It is a representation of you not having enough money to buy that thing that you tried to purchase, and it's wrong. It's like a sin, honestly. It really is. It's the worst. So get rid of it and stop operating in that type of mindset and get out of debt. Once you do this, you can actually have a plan to invest and actually have a diversification into these assets because that's the number. These are the number one things you need to be focused on is paying your debts, learning about crypto, and learning how to invest. The other one caveated in is learning about AI and using AI. These are the most important things you could be doing right now to protect yourself in going into the future. drink a lot of coffee. But yeah, no, really, I stress this, guys. I really stress this like a lot on my channel, is the risk management, and also just like having your plan. What's the strategy? Like, it's not like, I think crypto a lot of the times, and these crypto influencers and KOLs and all these people, they just like, it's like flash. It's blah, blah. Oh, this, oh yeah, you're gonna get the gains, bro. Here's the watch, man. You're gonna get the Lambo, next 100,000x, bro. And it's like, that's not, no, stop it. Just freaking stop. Stop tricking people. Stop tricking people. Tell them how it is. Tell them the reality. Speak to the people directly that are actually experiencing this and knowing that to be true. And then that is a way that we can actually relate with each other. We can actually relate with each other. You can't relate with a crypto insider that gets everything handed to him easily, and most of it's probably fake. You need to learn from someone who has actually made the dumb mistakes, made the stupid mistakes, and is in the journey right now, telling you exactly what I'm doing and how it's actually making a difference. Regardless of the mistakes that I made. And the most important thing, the best thing you can do is to say, okay, it's time to level up. It's time to level up. It's time to actually start putting points in that stat system, and that skill tree. That stat tree, that skill tree, baby. Like an MMO. Dexterity, strength, vitality, health. Let's go. That's what we have to do. That's what we're here. And by the way, you're here to hit the like button as well. So if you're enjoying this, please hit the like button. We're going to be ending here in about 10-15 minutes. We just wanted to pop on the stream and spit some sauce for you. We're going to show you that we got rocked on our trades. We were good for a little bit. We were pushing some momentum. We got chopped though. We took some profits, but honestly though, we were not quick enough to be able to trade on that volatility. It was nasty. It was nasty, guys. But I still think we have some opportunities coming up here. If you are going to try and trade the short-term volatility, just be cautious. You know, just be very cautious. A lot of rotations are happening right now, like from Bitcoin to ETH, but we're in ETH season. You know, we're in ETH season. It's becoming very clear that we are in ETH season, and that will lead us into a altcoin season and a rotation. We just have to be patient. But times like this is great, because then look, if you were wanting to DCA, you're getting a discount. Now everything is down 5%, 6%, 10%. You know, you look at the altcoins, things are down. You know, this is your opportunity to put your money where your mouth is. If you're like, I like these coins, you like them when they're green, well, you better like them when they're red too. You better like them when they're red. It's real easy to like a coin when it's pumping, but can you buy it when it's in the red? It's the same with Bitcoin. But honestly, Ranchin, I totally agree. I totally agree, because I can't stand scammy and it's like gaslighting. BNB is like, oh, we're so happy to be building the industry, and it's like you're wrecking the industry by literally manipulating and having too much market trading exposure on your platform, and you are allowed, because you're not getting in trouble for it yet, to wash trade and liquidate traders on Bitcoin and Ethereum on both sides. It's criminal. It's really, honestly, is criminal. And honestly, I think CZ should be ashamed of himself. People champion for CZ like he's some god of crypto, and it's like, no, you're irresponsible, CZ, and I don't like how you're acting like everything that you're doing is right or is ethical, or what your company that you hold 90% of your freaking portfolio in BNB, and you're telling us to just like be like, oh, just, really believe in crypto while you're not even holding most of the coins that we as the community want to hold. You're not even being a part of the freaking community, bro. You're literally being a scammer as just as bad as the vape cabal. So I'm not buying it, CZ. I'm not buying it, Binance. I'm not buying it. I'm not buying it, Brian Armstrong, with your bald head and Coinbase. I'm not buying it. You realize these people want to make money and they have big companies and they want to, they don't actually care about you, the investor, as much as they always say they do. And if they did, they would tell you to buy Bitcoin, ETH, and all that stuff and hold it on your own damn wallet. But no, they're not going to tell you that. But yeah. Honestly, screw BNB. I can't. That's why it's like I wish I could be bullish on them, but then when I see what they're doing on chain and like what people are actually discovering, like the craziness of what they're doing, I'm like, get off my timeline, get off my feed. I want your scammy crap. Because if you think about it, just think about it. Binance controls 60% of the trading volume across the entire market. They also have their own token. They have their own chain. You don't think they're going to be doing shady stuff to be able to suppress the breakouts of Ethereum and even Bitcoin itself? Then you are sadly mistaken. It's open crime season, baby. It's crime season. Open season for crime. So, just so you guys know, that is the way that the cookie is crumbling right now. But okay, we got a couple more minutes. If you got some questions, debates, discussions, answers, thoughts, prayers, whatever you have, give them to me now. Give them to me now. And honestly, I'm going to have to say it, guys. You've been terrible at hitting the like button. I don't know what's going on, but you guys got to step it up. I hate to call you out like that, but the like button has been a little lackluster. It's been a little lackluster. It's been kind of sad, to be honest. It's been kind of sad. I don't know if your thumbs aren't working. I know you're tired, but you got to hit the freaking like button. It's part of the damn YouTube currency. If you don't hit the like button, YouTube thinks my channel is trash. And it is indeed not trash. All right, let's see how the pulse bag is doing. Not too bad. Not too bad. But yeah, I think that's pretty much it. I mean, we're watching the exchanges liquidate everyone. We're watching the exchanges liquidate people. That's why they say you shouldn't play with leverage. And if you do, you should only do like 2x or 3x. And that was a question that I asked on X. I said 10x, and people were like, 0x, don't freaking leverage, you crazy person. And then some people were like, about 5. You know, some people said 2x, a 2x or a 3x. And I actually really liked the response that someone gave me. They said actually just do a 2x. It was this guy, Crypto Tiger. He said, I do 2x. Might sound boring to many, but it's all about risk management, and a 2x risk is way easier to handle and you can still make good profits. Now, I will agree with this because I've actually, where I've put in between a 2 and 4 or 5x, you are less likely to get liquidated. Your liquidation price is a lot lower than what it would be obviously with like a 25x or a 50x, 100x. You know, the margin to liquidation ratio is very, very small. It's like very, very small. So any price swing, like 1% can destroy you. So a 2x with more margin, like you could have $1,000 trade in with the 2x and catch a run and actually do really, really well and have less of a chance to be liquidated. You have less of a risk of whenever you do hit a stop loss, you're not like losing a lot. You know, it's not a drastic amount. You're able to control it, the risk management a little bit better. So I would say this is probably the best response is the 2x. You know, because people, here's the thing, you know, leverage trading and trading in general and trying to put in trades, it is addicting. It is addicting, 100%. Don't let anyone like convince you otherwise. Like, trading is addicting, because the moment that you do make a good trade and you see the potential and you see the possibilities and you see that like, okay, like it is possible, it's very addicting and it's alluring and it will suck you in. And you just need to know that to be true. And once you realize that, then you just need to navigate that euphoria, navigate that, the adrenaline, the dopamine hits and all that stuff. And if you can get a hold of that and get control of it and just be like robotic, whew, that's the difference of you making thousands of dollars extra in the month to be able to DCA with that money. Maybe try your luck at trading again. Extra cash you could put in your bank account. I mean, it's just like, it's the difference between having this skill and something that you can sharpen over the next few years that you could really use to your advantage. But you have to know there are risks. It's just like in investing. There's risk to investing. You can invest into a new protocol that could rug and go to zero. You know, think about the people that love Kanye and unsuspecting people that never have been in crypto ever. And they're like, oh, Kanye's launching a coin. Okay, what's this Phantom Wallet thing? Their first experience is going into the Phantom Wallet and getting rugged by Kanye. That's their first experience in crypto is downloading the Phantom Wallet and getting rugged by the same people that have been rugging coins, and they had no idea. But we know that all these celebrity coins and these certain coins and these little bundled launches, all the same wallets, all the same people. That's why we don't go near them. So it's all about weighing the risk, you know. Really. But okay. All right, Jesus Lord. All right, guys. I don't know what else to tell you. But we do appreciate you guys being here. Thank you for being here. Let's see. We have how many people were watching across all platforms? We had 7 people watching on YouTube, and on X, it says there was. How many people do we have watching? 23? Okay. I realize though too, I started a lot earlier. I started at my not normal time because I do have to end this early. I have to end it actually kind of right now. Oh, look, it's Alexo Crypto with his baby boy. Is it a baby? It's a boy, right? Is that what he had? Did he have a boy? Yep. But yeah, he did. Yep. Awesome. So fatherhood looks good on Alexo Crypto. Everyone go give a shout out and follow Alexo Crypto. He's a great trader, great YouTuber, good dude. He's got good energy. He's being a good dad. He's doing the dad thing. Super awesome. So yeah, we're really happy for him because that's just it's just a magical time. It's a magical time, so cute. I'll say, Dad, life looks good on you, my man. Super cool. Love seeing that. Yeah. And then what's so fun, this is why I get so mad at CZ and Brian Armstrong. They could represent the cryptocurrency markets in such a better way, but I just feel like they go about it in such a weird way. It's I wish I had the platform and the audience that these people do, because I feel like they just waste it, and they just they're just too smarty pants, and I can't, honestly, they're just annoying. I can't stand them. And I would tell that to their face. Honestly, if I saw them, I would say, Brian and CZ, why is it that if you are working in the biggest, most up forward, tech cutting edge of the whatever of finance, why are you so annoying? Why are you so annoying? Why can't you just be more relatable to people and actually get people on chain? But you quietly do the opposite, especially when it comes to realizing what the freaking community even likes. Bro is like is buying freaking SocialFi like stupid flash in the pan tokens or commenting about those, while there's like literally for years communities being built around coins not getting attention from these wads. It's an absolute disgrace. It's an absolute disgrace. It just shows that they just like, are you even watching what we're talking about? Do you even watch the market? Do you even look at what we like, Brian Armstrong? People have been telling you for years your app sucks, and you just now are trying to make it better? Hey, okay. I don't know what else to tell you. I don't know what else to tell you, you crypto founders. Besides that, you're an absolute disgrace. For real. Put a 1 in the chat if you agree that these crypto founders, they do not, I feel like they don't get it sometimes. They literally don't get it. And us, the small fry, the small guys, we actually understand the overall thesis of the market way better than these people do. That's why I think channels like this, whoever you're watching, I don't care. Thread Guy, me, Cryptosaurus George, Alex Becker. We have a more tune and a key on the markets than those people do. 100%. 100% we do. It's like talking to someone who still is using examples of like 4-year cycle right now. There is no 4-year cycle anymore. It's done. It's dead. The 4-year cycle's dead. We can go. We were off the 4-year cycle basically 100 days ago. Done. There is no more 4-year cycle in terms of how we used to look at it. And if you watch the markets and you watch what's happening right now, that's kind of what a lot, even the CEOs of Fidelity, Bitwise, Invesco, like all those dudes, all those guys, ladies and dudes, they say it's broken. They're like, there's way more institutional money coming in that breaks that cycle. So I don't know. But yeah. All right, we're done running our chop, running our mouth. We will be back. We will be back later today, since we didn't get our normal live stream that we do in play. We will be back around 7:30. 7:30 today. We'll be back, and we'll be kicking it. We'll be kicking it. We're gonna break down a lot of different altcoins. We're going to actually do something really cool. Because sometimes people can't. It's hard to follow if they're just figuring out the ecosystems and where to go and what to do. We are going to break down our portfolio. We're going to show you the ecosystems and the tokens that we are bullish on inside of Ethereum, inside of Solana, inside of Polygon, and we're just going to kind of go down the list, and we'll go through each narrative. The crypto gaming narrative, the meme coin narrative, the layer 1s, the layer 2s, the coins that are being used for treasuries, just all that stuff. We're going to go through it later today and kind of like build mock portfolios around 10 to 15 tokens that you could focus on. And we could even just do like mock portfolios and build them and say, okay, this is a $2,000 portfolio of Solana ecosystem. Here's a $2,000 portfolio of ETH ecosystem tokens that are connected with each other. Here is, and just keep kind of, going down the line. This will help you narrow down how you can build your portfolio, what ecosystems are strong right now, what they're connected with, and how we can assess and where we want to invest and how long and what the projection would be for holding these particular tokens going into next year, because that's where I feel like, again, we're going to see most of the crazy gains and, you know, parabolic runs going into next year, because that's when the real money printer's coming on. That's when the interest rates are actually lower. That's when the liquidity release is going to, I think, start to come in the market. So with that being said, guys, I really appreciate it. Thank you for tuning in. Make sure you repost, hit the heart button, hit the like button, whatever the sharing mechanism is of wherever you're watching from. I would really, really greatly appreciate it. It helps tremendously. You guys have no idea how much it helps that you're tuning in, that you're hitting the like button, that you're commenting, that you're sharing this with friends. All of that organic growth helps so much. I pay $0 for advertising right now. So any of this that is happening right now is purely organic, and it's all from you. So thank you. God bless you, you and your families. May the light of Lord Jesus Christ shine on you and your families. And I will see you guys at 7:30 later tonight. Peace out.
This token is the end game. It's the shitcoin of shitcoin. I mean, imagine telling your coworkers you're quitting because Harry Potter, Obama, Sonic 10, and you coin. Boom! Imagine the media reporting on Harry Potter, Obama, Sonic 10, and you. Ticker is Bitcoin, breaking 1 billion market cap. Now, unless you hate money, go ahead and visit
HPOStonight.com.